Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, July 16th, 2013. We're looking at the SPX today, the S&P 500, and another chart. First thing we'll look at, the S&P 500 will, of course, be the bearish divergence that's forming. You have the highest close on this chart would be here, and then you have the new high close here. So there's a nice move to the upside. I don't know why it's doing that, but anyway. So you can see we're actually trending up here between these 2 points. At the same time period, we look at the high point on the ultimate oscillator and then the lower high that's forming here, and we see a downtrend developed right there. So that's, of course, telling us that this move to the upside is not sustainable. It's a bearish divergence. We should be looking for a pullback. And again, I talked about yesterday, that's what you have to have. And just because you've taken out the previous high doesn't mean you've turned bullish. You've made this move up here. You haven't tested this low, so you've got to pull back and test that before you can say, well, now we're going to find support and then we're going to go long, or no, it's going to break down. We're going to go continue on the bearish perspective, and you're not going to know that until you get that pullback. So what you want to be doing is looking for that peak situation. And today's activity, we can see a good signal for that. You can see that yesterday we had the bullish move here, the 8th day in a row to the upside. Again, we told you yesterday that's above average. It doesn't sustain that way. It typically doesn't grow that way. And then today's activity, we simply reverse that, and you get actually a bearish engulfing of the previous day. So that's a good sign for bears as well. And I wouldn't actually be taking this one on the sell side here. You could use that as a sell signal. That is one of the sell signals, but I prefer to find shooting stars that look like this, and so that's why we use that one. You'll notice back there in that time period we had the bearish divergence forming there as well between these 2 points like this, so that made sense and we took advantage of that. This one here, we don't. I don't like that one. The setup is not as trustworthy as the shooting star, and so I wouldn't use this. But you can see an opportunity on the VIX, which runs the inverse of the S&P 500. So instead of going short the S&P, you could actually be going long the VIX, and so let me show you that. Again, let me point out that all these charts are kept on a free website at PerfectStockAlert.com, and they're updated every single night. And you'll know that if you went to the website and you checked it out, you know that we had this signal yesterday we marked for you guys to show that hammer candlestick formation calling a bottom there. And you would want confirmation the following day a higher high between this candlestick and the next, and you actually had that. So that's your confirmation. That's your buy signal there. And your stop will be set right here, and you're looking for a test of the previous high here. You break through that, and you got to test this one here. So again, that's a bullish move here, which would be again confirming the bearish move on the S&P we just showed you. And also point out that whenever the VIX, what the VIX is telling you, the volatility index is simply a measure of the number of option contracts that are being traded against the S&P 500. Now, if it's bullish, then if the S&P is bullish, then you'll see the VIX moving lower as people start to they buy fewer and fewer puts, or they cover put positions, and that shows that they are more confident in the move in the S&P 500. When they're no longer confident, you'll start to see the VIX start to rise, and they're expecting there's going to be a pullback, there could be some trouble, that kind of thing, and you'll start to see it reverse. And that's why they run the inverse of one another. So it's important to see that these two are confirming one another. That's what you should be seeing. If you read one chart and then you go look at another chart and it's not confirming that, for example, if you were to look at the S&P and you say, oh, I think this is really bullish, well, if you look right here at the VIX, you can say, well, no, that's not true. They're showing that you're finding a bottom here in the VIX, which means you should be finding a top in the S&P, so it's not bullish. So it's important that you always weigh those two charts together. If there's anything about the tutorial video that I've shown you today that you don't understand, you can go to the technical school here and learn about all kinds of different technicals. I've created several videos here, a couple hundred videos here that will be about 5 to 10 minutes long each, and they will teach you various different aspects of technical analysis, including chart patterns in the trade school, different trading setups you'd look for, and so forth and so on. Okay? God bless. Take care. If you've not been to the free website, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. See you tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.